things that you're liable for. All right, so language in the cyber insurance world, right? I mean, some of this is self-explanatory, but some of it I was very surprised when I started reading it. So coverage, clear, right? The amount of money that is like, you know, or the amount of like what things are covered, like what specific items are actually covered by this insurance policy. So a typical one is a collection of coverages, right? Limits. Limits are like the financial boundary in which the insurance company will pay. So if you have like a $2 million policy, like that's it, that's the limit, right? You have a $10 million policy, $50 million policy, those are your limits, right? They will pay no more than that, right? But then sometimes each one of these coverage areas has a sublimit, right? So you might have like a $10 million policy against ransomware, but there's a sublimit under there that is like 25K or 25,000, you know, something smaller, right? There's a lot of details around here that need to be worked out. This is why traditionally a lot of lawyers negotiate all these agreements, right? It's like lawyers and lawyers that do this, but you know, InfoSec is definitely getting more involved in sort of explaining what these things can cover. All right, exclusions. This is a big one. This is a huge one. Exclusions are things that the insurance companies will not pay because they believe that, you know, it's not coverable, right? And there's a lot of really, you know, important cases that are going on right now that like are going to test what the limits are. We're going to get into all sorts of exclusions, but these are huge details that need to be paid attention to because these are things that they won't pay for. Premium is the amount of money you pay for the insurance policy per year. Deductible is the amount of money you pay out of pocket if you have a claim. It's kind of the same with like regular consumer insurance. We get what a claim is. And again, just to reinforce that first party versus third party thing, you'll see that in the language of insurance policies a lot. Okay, so what I did here is I took like 8 policies and I sort of tried to pile them all together to like give you the highlights of like what an average typical cyber insurance policy looks like. It's a very recent one. This is a smaller one. It's a $2 million limit policy. But this is what a lot of them look like. All right, so coverage area 1, incident response. This is first party, right? This is things you have to do to your company to fix this problem, right? You have incident response costs, right? So they have a hotline. You can consult with an cyber incident manager. That's a $2 million settlement. Legal and regulatory costs. So legal advice and defense for regulatory action and fines. That's a $2 million policy. There are some caveats there because at the end of the day, the insurance industry can't be somebody where you can offload like, you know, criminal risk to, you know, and regulatory risk too. So if you're getting fined by like the SEC, you know, they're not going to like cover this stuff, right? This is like, you know, maybe a PCI fine or some other non-governmental, right? Otherwise it wouldn't make sense. It'd be like morally inappropriate as like a device for transferring risk, right? Security and forensics costs, right? You need expert witnesses. You need to contain this thing. You know, you need security consultants, communication costs. You know, you got a media response, brand reputation, put up that website, you know, printed mailings, credit monitoring, call centers, and then like post remediation, like lessons learned, risk assessments, gap analysis, policies, awareness training, like why did this happen kind of stuff. You know, but there's like sublimits there. When you read through this, you're sort of like, okay, well, there, you know, 5,000
that has been agreed open by the parties at the outset. Life insurance wage is insurance that provides coverage for a lifetime, usually up to the age 99 years. Unit-linked insurance is an insurance contract that provides protection benefit with low premiums as well as investment. These types of insurance profit but that an investment insurance coverage benefit. Insurance function. There are 2 functions of insurance as described in the book Easy Ways to Know Insurance. The insurance function includes primary and secondary function which are described as follows. Primary function. The primary function or the main function is the risk transfer mechanism. This function is a means or mechanism for transferring risks from the insured to the insurer for the possibility of loss or damage experienced by the insured by paying a premium. That's enough discussion in this video. Don't forget to like, comment, share, and subscribe best tofu channel. Thanks for watching. See you next video and goodbye.